Renewable energy stocks have been crashing hard this week, and that's saying it mildly. Some losing over 20% in a single day. And I've actually had several people asking me on YouTube, on Discord, and email even, asking me what's going on and if I could share my thoughts on it. So I thought I would just make a quick update video for you guys and just kind of share everything that's going on here. I'll quickly cover what's the whole situation surrounding it, what's causing these stocks to crash. And as always, I'll let you know if anything happens to look attractive to me too, or even, worth picking up at all. So if you like quick little updates like this on any kind of market movements, then make sure you hit that like button. That lets me know that you want more videos like this in the future. But yeah, let's go ahead and just jump straight into it. So just running through some of the biggest, most impacted stocks in renewable energy that saw huge crashes this past week. Let's just run through some of them. So we saw Enphase Energy, actually a very popular solar energy stock. They lost over 23% this week. They're actually a very big player in solar energy. They created the first micro inverters, which really help convert the DC energy that you get from sunlight into AC energy that can be used by homes and businesses. And they've since expanded too into like battery storage, even EV chargers and more. So a lot of people have actually liked that stock. Sunrun also fell even more at over a 30% crash. They're actually the biggest solar panel and battery installer in America. You might see some of their commercials often on Instagram. I see a lot of their commercials pop up for like installing solar panels for your home and stuff like that. We also saw Solar Edge. They fell over 21%. They're another company specializing in inverter systems as well as battery storage and other solar energy solutions. They also have a large global presence too across more than 145 different countries. Another one that is a pretty popular one, actually one of my favorites in kind of this particular space, was First Solar. They're the biggest solar panel manufacturer in not just America, but the entire West outside of Asia. I've always felt like they'd be, pretty important for American, manufacturing of solar panels. But they too fell another 15% this week too. We also saw some more speculative stocks getting crushed, like Plug Power, for example, a maker of like hydrogen fuel cell systems. They fell over 16%. They're down huge from the top. I mean, just kind of always being a pretty bad performer. Even though they're actually a pretty popular stock in the kind of speculative betting kind of community of the stock market. A lot of speculative kind of investors have always talked about Plug Power. And then even some stronger companies too, though, like the biggest lithium producer in the world, Albemarle, they fell over 5%. We have the EV leader Tesla falling over 5% too. And even what is my favorite renewable energy company, NextEra Energy, falling close to 3% as well. Although obviously those three were, obviously much better off than the rest. They didn't crash as much as the other stocks, but just kind of in general, saw a lot of stocks across the whole kind of energy sector really falling hard this week. So that leads us to the natural question: why did these renewable energy stocks in particular take such a big beating this past week? Well, this really comes on the heels of Congress, specifically the Senate, who updated the president's big, beautiful tax bill that eliminates most tax incentives for renewable energy projects. This is really, it basically went through the House already, has been approved. It got revised there. Now it's getting revised by the Senate, and then they'll have to vote on it. But this bill, what it basically does is it's reversing all of the Biden era tax credits from his Inflation Reduction Act that was really helping renewable energy companies a lot. And look, when you look at this new bill here, it does have a lot of tax incentives for other things. For example, it includes a no tax on tips. It includes a no tax on overtime. And it even extends many other significant tax cuts too. But while it does have that, it completely eliminates credits for both wind and solar projects by 2028, despite keeping them for nuclear, hydrogen, and geothermal. Now, to be more specific, those other areas of renewables, again, nuclear, hydrogen, and geothermal, those can still claim these tax credits as long as they begin construction by 2033. So they're basically good. They're not going to really be impacted by this. However, wind and solar, again, those are the ones that are really getting hammered here. They would need to either break ground on their projects, their expansions, everything that they're doing. They would have to break ground on these new projects either this year to claim 100% of the tax credits. They would have to break ground by 2026 to claim 60% of the credits, or by 2027 to claim just 20% of the credits. And then any new projects that come after that would basically get nothing. So that's really where, that's where they really start to take a beating. And the thing is, in renewable energy, and especially like solar and wind, there's been plans from a lot of companies to expand in the coming years. And they have a lot of stuff that they've been kind of working on. But it's stuff that is going to take years to develop. Now, the kind of bright side, I guess, to all of this is that they can break ground. I think initially in the first plan that went to the House of Representatives, I think that plan said that they had to actually be in operation by these deadlines, which would be extremely hard for these companies that it's going to take years for them to actually expand and build all of this infrastructure that they're working on. But in the new kind of revised version, they just have to break ground on it. So it kind of just gets them moving, right? Like they got to get moving on these things. They have to actually start building out all this infrastructure now as opposed to later. But again, later on, they're not going to really be able to be building and expanding so much with all of the tax incentives that they would normally get. And the thing about this bill is that it doesn't just stop there. Basically, it also eliminates all residential solar tax credits starting next year, which is the 30% federal tax credit that homeowners would get for installing solar panels on their roof. So that's huge. That's going to put a huge dent on demand for solar panels for home buyers because it's going to make it so much more expensive. Then the bill also would eliminate the $7,500 EV tax credit by next year, as well as credits for leased EVs and used EVs by this year too. So in all, that's a pretty devastating move here that we're talking about, especially for anything related to solar energy. They would basically make everything. It would make everything much more expensive in those areas, and thus it would weaken demand. Probably one of the reasons why we saw Elon Musk so upset with Trump recently. I mean, it's going to really just start to hurt demand for EVs, for solar panels, for homeowners that want to get solar panels, just making everything so much more expensive for them. So how much demand is there going to be for that stuff now going forward? It's going to be a little bit weaker, right? Because a lot of those things were already very expensive. Now they're going to be even more expensive when you get rid of these tax incentives. Now, many of these solar related companies, by the way, were already operating on pretty questionable margins. A lot of analysts think that some of these companies wouldn't even be viable if it weren't for all of these tax breaks that they've been getting. So now you're talking about probably smaller companies, especially probably going under, some of them going under who have only really been able to operate because of these tax incentives. And even larger ones too, you're going to be looking at companies being much less profitable going forward, which again is definitely a reason why the stocks got hammered, because investors care so much about profits and margins and all that kind of stuff. So going forward, I just think that we're going to see, again, things being much more expensive for companies, for consumers, weakening demand, and thus hurting these companies if the bill actually goes through, which has not technically happened yet, but Republicans do have a majority in Congress. So when they do vote on this bill, it's likely to get passed. I think they're aiming for it to get passed by July 4th is kind of the deadline that they're hoping to get it passed by. But with all of this in mind, are any of these affected stocks a buy now going forward? Well, first of all, again, the bill is not technically approved yet. And in fact, there's still negotiations going on. So if by some rare chance, some of these cuts end up getting reversed, which could technically happen, if it does, I think these stocks would probably skyrocket after such huge crashes. Now, do I think that'll happen though? No, I don't personally think that'll happen. At least at the moment, all signs are pointing to these cuts going through. And personally, I do think it's going to heavily impact these companies in a very negative way. On top of that, I think that the future of energy is already looking more and more likely to go towards nuclear, not necessarily solar. And especially with the rise of artificial intelligence and all these massive data centers, being built everywhere, there's really no other form of energy that I see large enough to power all of this new AI and data center and cloud infrastructure other than nuclear. That's the only one that I really think can handle it, at least at the moment. And it's the reason why so many of nuclear stocks have actually been soaring more recently. In fact, I put out several videos on nuclear stocks. I mentioned that my personal favorite has been Oklo. It's the stock that I was buying for nuclear exposure. But already I'm up over 150% on my position in that it's in my Roth IRA account. Because of all of this, though, because of all these headwinds for solar, at the moment, I'm just not that crazy about solar energy stocks. And it sucks, I know, because that's clearly the area where we're going to see the deepest value in the energy sector because of all of these recent crashes in their prices. But I just think that there are safer alternatives out there, and those would be within energy, it would be companies that are not so heavily dependent on solar and that are at least diversified a little into other areas too. Now, you could argue that Tesla, for example, would be part of that, as they're also betting on other trillion-dollar markets like robotics, which Morgan Stanley estimates will be worth over $5 trillion for humanoid robots. And Elon Musk recently said that he believes Tesla will grab around 10% of that market, with the goal of already producing 5,000 of their Optimus robots this year and another 50,000 next year. We'll see if they can meet those targets. But, they're also in autonomous driving, which is expected to be huge for logistics and, of course, robotaxis too, both markets being easily worth trillions long term. And although Tesla did delay their robotaxi launch in Austin, Texas recently, they're still just one of the biggest plays on that. Now, the issue that I see with Tesla, though, is, well, number one, much more personal to me, obviously, but I already have my position built out in Tesla, and I'm up like hundreds of percents on that position. So it's not really a stock that I want to be buying anymore at the moment. But even if I wasn't already in it, it's not exactly an easy buy at the moment, with the stock already up over 370% in the past 5 years. That's leaving a valuation that is about 1,000% more expensive than the sector. Obviously, they have a lot of things going on with them. Obviously, they have some more kind of revolutionary technologies that they're working on. So that's why they command such a premium price tag, but it's still a very tough pill to swallow. Now, where I could see a bit more of a reasonable price tag, at least for energy stocks, would be for a couple companies that I think are diversified enough to survive this transition and adapt. And that would be companies like NextEra Energy, or even a legacy player like Chevron. With NextEra, for example, while they are a gigantic wind and solar producer, they're also one of the largest utilities with a big transmission business, new investments into battery storage, and they're even one of the biggest producers of both natural gas and nuclear energy, which they continue to invest in for future growth and expand on. And it's something that could help offset a slowdown in growth that they might see from solar and wind. The stock isn't down a huge amount like pure play solar stocks, but it is at least down about a quarter of its value from the highs. And that's left a valuation that is about the same as the sector on a PEG basis, which is pretty attractive too when you consider that they also pay out a very nice dividend that yields more than 3%, and it carries some excellent growth metrics like a reasonable payout ratio, a double-digit growth rate, and about 3 decades of consecutive growth too. So it's a pretty good dividend growth stock as well. Similarly, Chevron, while being primarily an oil and gas company, it's also spending many billions of dollars to expand their green energy projects, like in carbon storage and hydrogen, and even some strategic investments into nuclear startups as well. And all of those could be, trillion-dollar markets long term. They very likely will be. By the way, keep in mind that a Trump presidency is also very good for big oil, because that new bill while making cuts to renewable energy projects, it actually retains and even strengthens a bunch of incentives for drilling oil. So it really helps them. It's probably like one of the biggest reasons why Elon's relationship with Trump ended so abruptly recently, as he's been a very strong, outspoken critic of the bill for hurting the companies that are related to renewable energy. It's hurting the country's transition into renewable energy while rewarding big oil. So Elon Musk has been very vocal, especially like on his X account, saying that this bill is kind of a disaster in his view. And despite how much all of this helps a company like Chevron, though, their stock has actually been fairly suppressed for years, and it's currently down about a fifth of its value from the top. Now, I'm not a huge fan of the valuation. It's sitting at about 30% more expensive than the sector on a forward PE basis, but I do think that the dividend helps make up for at least some of that with a pretty high yield of 4.6% and close to 4 decades of consecutive growth. But again, overall, I'm just not crazy about energy stocks right now. I mean, I'm trying to give you guys something here. I'm trying to show you which stocks I'm at least, a little inclined to buying, but realistically, this is not the area of the market that I'm excited about buying stocks right now. I think that energy, the whole sector, has really become very politicized, especially more recently, to the point where it's likely going to be swinging up and down heavily depending on which political party is in charge, which policies get through, which are denied. And look, that could be great for swing traders out there that like the volatility, but it's not so great for long-term minded investors like myself that really like to just invest in a company and really think out very long term and not worry about short-term noise and volatility and all that. Now, for the long-term kind of vision, for a long-term minded investor like myself, I would have to look at something like nuclear. That's where I see the most growth happening long-term. That's where, as much as policies can influence it, I think it's something that is very much needed for AI, for data centers. So you can't really deny it that much. And I think whichever country goes all in on nuclear is going to see the more success. So I think America will go heavy into nuclear. So that's where I would want to put my money. The issue, though, is that as I just showed you before, is that a lot of nuclear stocks have skyrocketed this year. Many of them have rich valuations. Many of them are still in the early stages of building up. So it's something that you'd probably want to wait and see which ones are better ones to invest in. And like I said, as for me, I already have some Oklo stock and it's up so much that it's kind of hard for me to want to or get very excited to buy in at these higher levels. Now, I'm sure long term, most energy stocks will adjust and probably be fine. And even with solar too, I mean, I think that as that technology improves, solar does make a lot of sense to be able to use that free energy that you get from the sun and then use battery storage technologies to maximize the efficiency. So long term, I do still think that it's a viable option. But at the current moment, I just think that there's safer areas to be investing in that are less volatile, less political, and more easily predictable. So I don't really plan on making any big moves with really any energy stocks at this time, but hey, I'd love to hear from you guys. What do you all think? Leave your comments down below. There any energy stocks that you like right now? I'd love to hear your thoughts. And hey, I'll keep you updated as much as I can going forward. But hey, thanks for stopping by, my friends. I hope you enjoyed this update, and I will catch you in the next one. All right, take care, everybody. Bye-bye.